Welcome to the video, my friends. So in this video I'm going to show you a strategy for trading, for scalping, that is effective and will change the way you look at trading and will change the way you approach trading. Now it involves the use of just 3 indicators, right? And these 3 indicators can be found in any MetaTrader suite. So let me first of all delete the indicators and let me explain to you how the strategy works. Make sure that you give me a like and a subscribe, right, if you like the video, all right, and make sure to also share it with somebody. Okay, so the first thing that we are going to do is we're going to add the parabolic SAR indicator. The step is 0.02, the maximum is 0.2, and the style is 2 pixels. You can use any color you prefer. The next indicator we are going to use is a moving average. We're going to use a moving average of 100, and the method is exponential. Apply to close. The style is 2 pixel, and the color, you can use any color you like. All right, so we're going to add a third indicator, and the third indicator is a relative strength index. So pay close attention. We're going to go to the levels, and we're going to change the levels to this 25, 75, and we're going to add the third one, which is going to be 50. The style is 2 pixel, the color should be anything, and apply to close. All right, so here we have the indicators set up on our chart, and I'm going to explain the strategy, and I'm going to explain to you how you can use the strategy. So we first of all have to understand how these indicators work, and I'm going to show you with the parabolic SAR. It consists of these dots, right? So the SAR consists of these dots. The RSI is the one below with the squiggly line, right, the blue line, and the 100 exponential moving average is this one in the middle. So we can see that when the dots of the SAR are moving like this, right, and the dots are also underneath, and the dots are also underneath the candlesticks like this, right, the candles go and cross this point, right, and they go above, and if it's below the 100 exponential moving average, right, they go below. So let me go over again. So over here, right here, we have 100 exponential moving average. You see the moving average? The candles are below, right? The candles are below the exponential moving average. So when the candles are below, we go for a sell, and when the candles are above, we go forward a buy. But it doesn't just end there. This is how you use it. So you are going to wait for when the dots are arranged like this, going upwards, and then the dots are also coming above the candlesticks like this, coming downwards, making sure that the 100 exponential moving average is above the candlesticks. And just at this point right here, where the candlesticks cross the dots, you are going to go for a sell trade. Now you're going to go for a sell trade. Now, as an extra confirmation, you need to make sure that the RSI line is underneath the 50 mark, right? So if it's underneath the 50 mark, it's a confirmation that there is potential for selling, right? it has to be underneath the 50, but should not have, oversold. This is the oversold point, this is the overbought point. So over here, right, the RSI is underneath and has not oversold, right? It has not touched the oversold point yet, so it means that there's room for the candlesticks to come lower. Now let's go look for a buy situation, and let me show you a buy situation. So we have a similar situation here. First of all, we have the 100 exponential moving average here. First of all, we have the 100 exponential moving average here. And then we have the parabolic SAR dots, right, coming down like this. And then some of the dots are also underneath the candlesticks, going up like this. So it starts to go up. Now at this point here, where it crosses the dots, at this point here, right, that's where you enter and go for a buy trade, making sure that the RSI is also above the 50, which means there's room to what? There's room to buy. Now with such a strategy, scalping, you can go for 20 pips, 30 pips, and then you walk out of the trade. When you're scalping on 5-minute chart, go for 20 pips, right, to 30 pips. 5-minute chart, you can even go for 10 pip, and you open multiple orders so that you are in the trade quickly and you're out of the trade and you secure the profit. There's no need to stay in too long. Now, what other things can you add to this strategy to make it even better? Before we take the trades, we can go on a higher time frame. So when we go on a higher time frame, like the daily time frame for the US 30, we can see that the candlesticks are above the 100 exponential moving average on the daily time frame. Now, as day traders, because we are taking trades intraday, meaning that our trades will open and close during the same day, we must check the daily time frame for a total understanding of how the chart is moving for the day, right? So when we see that it's upwards on the daily time frame, we can use this as a confluence or an extra confirmation. And then when we go on the 5-minute time frames where we are scalping, we should take trades that are in line with our confluence on a daily chart. So on a 5-minute, instead of taking the sell trades or instead of going for sell trades, we will be looking for buy trades, since on our daily time frame, right, the confluence is green, or the confluence is that the charts are going upwards. So that's the end of this video, right? It's a short video. I want you to try this out on a demo account and see how it goes, observing all the rules, making sure that you stick to it and use it for scalping. Go in and out, surely take 10 pips, 20 pips, and don't stay in too long so that you are not stopped out. So in the description, right, I have a link there to my free community and also to my trading course. If you want to sign up for my trading course, you can check the description. That's the end. Peace out.